Good morning, everyone. Welcome to Almus Market Mornings, your daily dose of financial updates. I'm your host, Swaraj, and I have with me Mr. Pankaj Rathi, who will help us cover the latest developments. Now, news regarding rate hikes continue to come in as South Korean Central Bank raises its key interest rate to fight inflation, but we also saw them downgrade economic growth from 3% to 2.7%. Morning, Pankaj, what can you tell us about South Korea? And also, please take us through the latest updates.
Thanks, Swaraj. Good morning, everyone. It's becoming more and more clear that all central banks are now inclined to fight inflation rather than focusing on economy. So, global central banks are on the side of increasing rates. Yesterday, New Zealand raised rates, and today South Korea raised rates to 1.75%, and that seems to be a trend now. Most market was focused on minutes of the last FOMC meeting published late last night, which evidenced that the Federal Reserve official agreed that they have need to raise interest rate in 50 basis point steps in their next two meetings, continuing an aggressive set of moves that would leave them with the flexibility to shift gears later if needed. Now, that has led to market pricing now 95% probability of 50 basis rate hike in June meeting. FOMC minutes also signal that policy will be more data dependent after next two meetings, where they will be expected to raise 50 basis point in both the meetings. Minutes also affirm that the balance sheet reduction program will begin from June, and that will run parallelly with the rate hikes. US market rallied after the release of minutes that they were mostly on expected lines, and showed official affirming that economy was strong and they grappled with inflation without triggering a recession. The dollar fell after the corrective rise even earlier in the day, while yields remained slightly volatile, but within a range. As decades high inflation sustained in major economies and financial conditions tightened, we would be looking at indicators of economic activity closely to assess impact on growth and whether any kind of a divergence is coming from what FOMC or major central banks are saying. On a positive note, German economy recorded a good growth, 0.2% quarter-on-quarter as per expectations, but YOY growth was slightly better at 3.8% versus expected 3.7%. Now, this reading is a relief to Germany skirted a recession, often defined as 2 quarters in a row of a quarter-on-quarter contraction, after GDP fell by 0.3% at the end of 2021. This also followed by an improvement in IFO index of business sentiment. The another data point which market would be looking at is a second estimate of US GDP for Q1 today, which will be released today. Now, this is expected to be minus 1.3% versus first estimate of 1.4% last month. Now, this estimated contraction in the economy was primarily due to a trade deficit and a decline in inventory management. Now, we are seeing there are some Fed members are actually trying to calm down the markets by mentioning that central bank should pause after the next two rate hikes, which is seen to be light in the week of data seen off late. However, right now FOMC is giving more weightage to fighting inflation and could tolerate some slowdown in the economy. We will have a more clue on price trends, which the data which will be coming tomorrow, price consumption expenditure data. Expectation is for the MOM month-on-month core to remain at 0.3% like last month, while the YOY is estimated to have dropped to 4.9% versus 5.2% last month. This looks like more at what happened in CPI. Besides, personal spending is also expected to moderate to 0.7% from 1.1%. This data would be a very important from a Fed point from FOMC, but they track more PCE than CPI. We feel that equities will show less reaction to the rate hikes, which are broadly discounted. But we need to watch how the other currencies against dollar are performing. CNY is likely to be underperformer as the Chinese central bank is in easing mode and economy is in a sharp slowdown phase. Indian rupee, as of now, trading in a very narrow range, 77.40, 77.70. The high oil prices are receiving maximum attention and weightage and keeping it relatively weaker. Thank you. That's all from me. Have a nice day.
Okay, thank you, Pankaj. And as Pankaj mentioned, balance sheet reduction program to begin from June, as stated in the Fed FOMC meetings. Even the German economic growth came out to be better. I would like to end on the quote I came across today by Jim Hageman Snabb. When money is cheap, people invest in stupid things. Now, Jim is the chairman of Siemens and Merck's. A very interesting quote. Now that money is no longer cheap, we can see a lot of euphoria regarding new tech died down. That's it from my end. Thank you. We'll see you all tomorrow with the latest developments.